All right, ladies and gentlemen, the news flashing on your screen that October to December GDP growth has come in at 6.2%. Remember, if you compare with last quarter, it is still a better number from 5.4%, but the anticipation was slightly higher. We have with us esteemed panel. I have with me Aditi Nayar and also Subodip Rakshit to talk about these numbers. First of all, I want to come to you, Aditi. How does this number look at to you?
Thank you. Our forecast for today's GDP print was 6.4%. So this is a tiny bit lower than where we were projecting the GDP growth to come in. When I look at the components of GVA, I would say about half have underperformed our expectation and the other half are at par or slightly higher than what we had expected. So a little bit of a mixed bag. Having said that, there are a lot of revisions in the prior data that have come out today. So I think that is something that we need to parse over very carefully as well.
Tad bit lower for Aditi Nayar. What is your expectation and how does this number look to you, Subodip Rakshit? Because 6.2%, the expectation was between 6.3 to 6.4% widely.
Yeah, so the third quarter expectation for the GVA was at 6.4% for us, and we were expecting the GDP to be much lower, closer to a 6.1%. The gap is basically the net indirect taxes growth that should have been that should have brought the GDP numbers lower than the GVA. Both the numbers are at 6.2. We're not too off in terms of the numbers, and I think this is a print that we think just kind of reflects the growth moderation that we have been seeing over the last couple of quarters, but a pickup nevertheless from the quarter from the second quarter.
Attention to the revision which has happened now. The growth numbers which we mentioned earlier was 5.4%, which was released by government, but now it has been revised to 5.6%. Apart from that, April to June GDP growth has been revised to 6.5% versus 6.7% earlier. Now, Aditi, if we take into consideration the forecast which was given in the economic survey, it was 6.4% for the whole year. Now, for that, the GDP should grow at least more than 7% in the fourth quarter. Do you think that happening?
So that's actually quite an important question. Now, when we look at the kind of revisions that have happened, I would say that Q1 and Q2 have cancelled each other out. One is up by 20 basis points, one is down by 20 basis points, and Q3 has come in only slightly lower than what we were projecting. Now, for Q4, there's actually a couple of reasons why we do expect growth to pick up. One is that government spending, particularly on the capex side, there is a huge room for growth in Q4. And we'll get the January fiscal data for Government of India later today, which will help us understand whether this headroom is likely to be realized or should we be prepared for a shortfall as far as the capital expenditure target is concerned for Government of India. And for the states, it takes a little bit longer for the data to come in, so we'll have to keep an eye out for that. Also, I think the Q3 agricultural growth number is one that really overshot our expectation. As I was saying earlier, it's a bit of a mixed picture in terms of the sectoral trends. So we will possibly end up revising our forecast for agricultural output higher and in Q4, and I think that is something that should also support the rural demand. My sense is that the overall FY25 GDP growth number is still likely to come in somewhere around 6.3 to 6.4%.
Let's also welcome Mr. Jayesh Mehta to the show. At 6.2%, how do you see bond markets reacting?
I think bond market is in a different trajectory. I think it's reacting more to liquidity and which measures are being used for liquidity, right? So it's like, if you use OMO to fill in liquidity, it definitely helps bond market more. But of course, when you do a FX swap to fill in the liquidity, it does not aid the bond market. But nevertheless, all said and done, bond market is looking forward for one more rate cut in April. Also looking at liquidity measures, and their expectation is few more OMOs should come in. But that's only once the announcement comes, people will kind of react to that. But at that juncture, it's kind of tracking normal, I would say, technical side of it rather than the fundamental side of it. Like, you will go into March, you will have a lot of profit booking coming from particularly government PSU banks and stuff like that for their March year end. So I think from that perspective, that's why it is kind of right now it's remaining around at 671, which was the same yield which are just before the rate cut, right? So maybe this month particularly it will look at, market will see how much of profit booking is coming in. So I don't think right now macro factors matters that much. The 0.1 here and there does not really impact the bond market dramatically.
All right. The sectoral data is also out. I would read out for you. Agriculture sector growth is at 5.6%. Similarly, mining sector growth is at 1.4%. Manufacturing is at 3.5%. Construction sector growth is at 7%. I want to come to you, Mr. Govind Rao. Welcome to the show. Which sector you think has been surprising for you, because we have seen agriculture coming at 5.6%. Do you see it is as surprise? Mr. Govind Rao, can you hear me? All right, we will come to Mr. Rao later once the connectivity is better. But for the same question, I want to come to you, Aditi, which is an outlier sector for you.
We had penciled in around 4%, so this growth has come in well above that, and this is reflecting both the fact that primarily the fact that the Kharif output was quite good. Now looking ahead, the Rabi sowing is also quite healthy for a number of crops, and the reservoir levels are robust as well across most regions. So for a quarter or two, maybe such high growth rates in agriculture could sustain before they start normalizing a little bit by Q2 or Q3 of the next fiscal year. Other than that, I think, mining has come out of the contraction. At least the early data for Q2 had indicated a contraction, so we got a positive growth over there. So that's good news that at least none of the sectors have reported a GVA contraction in Q3 of FY25. Manufacturing is still a very low growth, so that is something that suggests that despite an improvement in the volumes, margins were still under pressure in a number of sectors, and that's why the overall manufacturing GVA growth is still very low.
Two sectors where growth is above 7% is construction sector and services sector. Subhadeep, do you see services sector improving even further in Q4?
Difficult to say, because services in general is a mixed bag. The reason I say so is if you look at the financial services, that has been on a downtrend, even though the numbers may not be looking as such, because part of it could be real estate services. But in general, financial services with the slowing credit growth could be a headwind for the services as a whole. Secondly, we know that the consumption part of the urban consumption part has been on the weaker side. So building in an upside in the fourth quarter, just in terms of consumption or urban consumption picking up immediately may not play out, which is why the services part of the GDP or GVA may not necessarily pick up significantly from here. Government expenditure and related activities may see some uptake, given that post the elections the spending had started to pick up. So the third and the fourth quarter will be much better, and that could reflect in some positivity in terms of pushing the services side up. On the whole, I don't think services will see a very significant pickup from the current levels. Maybe 20-30 bits higher would be possible, but not significantly higher.
Mr. Govind Rao is back with us. Mr. Rao, we were doing a basic calculation. If this quarter number is at 6.2% and we have to achieve 6.4% by the end of this year, somewhere above 7% GDP growth should be there in Q4. What do you think are the steps or possibilities of that 7% plus growth scenario in Q4?
I think it's going to be difficult. It's not going to be impossible though, but it's going to be difficult because the first quarter growth was 6.7%. Second quarter growth was 5.4%. Now 6.2% means obviously you will have to go at 7%. And I don't think there will be agriculture has shown a very good growth in the third quarter, but it may not show up so much. Mining is not in a good shape. The growth of 1.1% is not very happy. Services sector 7% even the fourth quarter may improve because government expenditure will continue to be one of the triggers. Because the first two quarters there was not much of a government expenditure because of the election code of conduct. Manufacturing, I think, should do much better than in past. I would say that 7% is on the higher an overestimate. My own feeling would be that it will be something like 6.7, 6.8%.
Less than 7% is a wider possibility which has been seen. I want to come to you, Subhadeep. You were mentioning about services sector. What about construction sector? How do you see that coming in for next quarter?
Construction should hold up because we have seen a decent trend in steel consumption, cement production, and the government expenditure also has been back-ended on the capital expenditure side. So that should kind of hold up in terms of in terms of pickup from the current levels of, let's say, 7% that we might be seeing on the construction should be higher. Is my I would say belief in for the fourth quarter.
Mehta, now the obvious question which will be there for Reserve Bank of India, the wide anticipation is once again that there might be another rate cut which may come in the next policy. Now with 6.2% number and the kind of projections which were there by Reserve Bank earlier, do you think it is a fair possibility?
Yeah, at this juncture, market is expecting, I would say, it's a very high probability that in April we'll see another 25 basis point rate cut, and maybe after that we may see a pause, but definitely in April we will see some 25 basis point rate cut.
All right, it is the time to take a very quick break, but please stay with us because the guests are not going away. We are going to discuss this topic in detail just after the break. Let's come back after the break. Welcome after the break. We are discussing the GDP data which has come in for Q3 at 6.2% and also the news flashing on your screen. April to Jan, a fiscal deficit is at 74% of revised FY25 target. The total is 11.69 lakh crore. Aditi, we were discussing about it. How does this imply to overall numbers now?
Look, my sense is that 6.3% is probably a more appropriate number for the full year now. I have very quickly run through the sectoral forecast for Q4. And specifically on the services point, I think there are definitely a few positives and maybe some question marks. So my sense is that services exports have done very well in December, and that's a wait and watch. We need to see how they do in January, February and March. So that could be a positive. Also, travel will be up. We had all the Coldplay concerts, Mahakumbh, etc. That is going to give a boost of whether, even though it may be temporary, it is going to give a boost to some of the trade and hotel and communication segment of services sector. There is quite a bit of headroom for government spending as well, so that should also be supportive. Possibly one area where the numbers will not be so good will be the NIMs for the banking system, with rate cuts having started, but certainly liquidity not allowing the transition to the deposit side to start right now.
All right. There are two sectors which will hold key for Q4. These are manufacturing and mining because the numbers are on the lower side. I want to understand from you, Subhadeep, how does these numbers signify for the current quarter and what are the expectations for the next quarter?
So when we look at manufacturing, a lot of it also derives from the corporate earnings, which had a decent pickup from the second quarter to the third quarter. It's unlikely that the fourth quarter will be extremely high, and hence we possibly won't be seeing a very significant push in terms of the manufacturing sector. I think the implied growth will have to be significantly higher if we are to look at reaching that 7.4% mark or 7.5% mark in the fourth quarter. So I don't think it's in terms of the manufacturing, we should be seeing a very significant increase in the fourth quarter. I don't expect that to be the case.
So Jayesh Mehta, with fiscal deficit now it's 11.69 lakh crore, the numbers have come in. GDP figures of Q3 at 6.2%, and some of the favorable announcements which has come in from Reserve Bank of India in terms of liquidity. How do you see the markets will absorb this news?
So a couple of things. So from a pure growth perspective and all that, I think all this roll down takes at least 3 to 4 months. As far as bond market is concerned, definitely they take it constructively. But as I said, liquidity injection through swap has a different impact on bond market, or liquidity injection through OMO purchase, right? So that creates additional demand. But having said that, even liquidity injection does help. But we are in a month, we are going to be in a month from tomorrow where we will see a lot of profit booking for the year end. That would come in. So the people would like to see how that profit booking pans out before moving to the next level on the bullish side of the bond market.
Mr. Govind Rao, now it is just 1 month which is remaining for this fiscal year to end. 2-3 quick things. One, do you think that government will be able to spend the capex target which was announced in budget will be met? And also, in terms of growth, do you think that extra push can be given in the limited time we have?
As far as the fiscal deficit is concerned, the revised estimate actually shows lower than the budget estimate anyway, and almost 1 lakh crore. And therefore, I think that lower figures it may be able to achieve. In any case, the fiscal deficit is not likely to exceed the revised estimate numbers. And as far as the growth prospects are concerned, one of the things that we are all not concerned is the entire thing that has happened in the UP, the Mahakumbh, the amount of spending that has gone on there has been quite substantial. And that could really revive to some extent. But certainly 7% growth for the fourth quarter is not a possibility. But then the service sector growth will be much higher. Manufacturing I am not too sure, but mining can revive from 1.1%.
Right. Thank you so much for joining at this hour, all the guests. And with 6.2% growth, we are still the fastest growing economies of the world. While we aim, of course, there are efforts which needs to be made from fiscal side as well as monetary side. Now let's move on in this